I wrote the piece because we get caught in this, it hasn't been moving for this amount of time, which is true. But the reality is, as we've learned from silver was, unchanged not that long ago, since 2012. Now all of a sudden it's gone through the roof. I think we've reached a point that time is moving so fast that people have to realize if we need certain things in a certain amount of time, we can't get them if they're physical. We can certainly get them if they're based on software. And so Bitcoin fits in this world where I think it is a scarce asset. Things that are scarce are getting more valuable. And I think people just need to be a little bit more focused on if it goes down to 70,000 before it goes to 200,000 and it takes only a month to get to 200,000, pay attention to silver. People that got frustrated ended up watching something go up dramatically in a short amount of time.
Markets are testing everyone's patience again. Bitcoin hesitates, silver spikes, and traders argue about whether the next move will be a crash or a breakout. But look closer, and you can sense the tension building. Every quiet stretch in history ends the same way, with one unexpected spark that turns stillness into motion. You can feel that same energy now, the kind that makes investors second-guess their timing right before everything moves at once. Now, popular macro investor Jordi Visser believes this frustration is actually part of the setup. In a world running faster than ever, physical assets like silver take time to react, while digital ones like Bitcoin can move overnight. And he argues that Bitcoin is perfectly suited for this age of compressed time and instant liquidity. Scarcity gives it value, and speed gives it power. So whether it dips first or races higher, the real story here is how quickly change can happen once momentum finally returns. Think back to silver's long pause before it surged. The people who stopped paying attention missed their moment completely, and honestly, the same pattern may be forming right now. Bitcoin might not reward patience in a clean, straight line, but when it finally moves, it has a way of reminding everyone just how fast the modern market can rewrite expectations. So with all that in mind, let's go ahead and watch some clips from Jordi Visser's explosive interview to get a deeper look at what might be unfolding. And of course, don't forget to like, subscribe, and turn on notifications so you never miss additional in-depth content. Thanks again for joining us. Enjoy the video.
We were at the event last week, the crypto event, and the frustration was clearly there. Bitcoin's been, for the lack of a better word, a nothing asset now for over a year. And it's clearly frustrating people. It was a very different environment than what we saw last year when we were there. And I wrote the piece because we get caught in this, it hasn't been moving for this amount of time, which is true. But the reality is, as we've learned from silver was, unchanged not that long ago, since 2012. Now all of a sudden it's gone through the roof. We're starting to, people are out there saying, you can't look at arithmetic charts. You have to look at logarithmic charts. And the reason is because it didn't move for a long time. I think what we're in is a world where everything is moving faster. The pace of AI is moving so fast that every time someone wants to, hey, this is X% above the 200 moving average, I want to get out of it. And part of what I wrote in there is just a psychological belief with people, which is if you buy Apple, if you bought Apple at $2 and it went from $2 to $100 in a short amount of time, you're going to sell out of it. Because your brain is going to be like, that doesn't matter. I don't want to be involved. If on the other side, it takes 20 years to get there, same price, you're not going to get out of it as quickly. So I think the issue that really comes down for people is we're at this point where time has changed. And the easiest way to say it is when Dario Amodei and Demis Hassabis and all of these scientists come out and they say every year in innovation is like what a decade was. Well, by definition, that means that when we reach the point of this stuff going, software stocks can quickly go to zero. They can. Not all companies will go to zero, but if you're not able to adapt quickly and pivot your business, which is really hard for big businesses, you're vulnerable. If all of a sudden silver becomes an issue and people realize we don't have enough silver, they start buying for the next 5 years. Think about the deals we've seen. Elon Musk did a deal with Samsung back in July for chips, $16 billion, and actually bigger than that. NVIDIA did a deal with Samsung in October. We had this week Corning, which I've brought up on this show, gapped higher. And the reason it gapped higher is because optical fibers were clearly running out because Meta did a $6 billion deal with them. We are at the hoarding stage of physical stuff. Software is abundant. You can make as much code as you want sitting there and wherever you are right now. I can do the same thing. We can't go out and mine silver. We can't go out and actually find any other than it being in a drawer, maybe of a flea market or somewhere someone's trying to sell it. So I think we've reached a point that time is moving so fast that people have to realize if we need certain things in a certain amount of time, we can't get them if they're physical. I wrote a paper on time and just this whole concept that when things are moving at an exponential pace, everything is kind of vulnerable here. If you're a VC or you're a private equity firm or a private credit firm or anything related to long duration software where valuations are high, what is happening in all these markets, including commercial real estate, if we're not going to have any people working in 5 years, what do we need commercial real estate for? If we're going to have deflation in humanoids in 5 years, why are we going to have rates at anything but zero? This is the problem, is that we've entered a world where AI is moving so fast, faster than we can deal with it as a society. The Fed should be thinking more forward looking. Now, this is the argument that Scott Bessent has made. This is also what Rick Reeder has agreed with, which is this is more like coming out of the internet and the way that Greenspan dealt with things, where he was willing to cut rates even as the stock market was raging. I think we're going to be in that debate for a long time because, again, the acceleration that's happening on artificial intelligence that we've just seen in the last 3 months with the software side, the disruption that it's having, all long duration assets are under question because of this. And I think that's going to be a focal point for the Fed. They're making decisions based on data today and not focusing on 5 years from now. I literally, in this weekend's video, I'm putting it together now, and I have a chart in there of gold relative to the S&P back to 1970, and it peaked magically enough in 1980, which was when the personal computer basically got credited as starting. Personal computer, or IBM, actually came out in 1981. But the reality is, between the Apple III coming out in 1980 and IBM's computer coming out in 1981, that was basically the peak in gold relative to the S&P. I have said before, and I will continue to say, that I believe what is happening right now is that we are entering a world where all companies, all enterprises, all mega cap stocks are going to have trouble dealing with artificial intelligence. And it's the rise of the entrepreneurs. And it is basically a slow moving problem for all of the bigger companies. Now, they will be at a point where they'll be replacing employees. But what we're seeing with the hyperscalers, and what I want people to understand, we've already run into a capacity problem. We can't run as much code as we want to run because there's no cloud for it, which means these businesses are going to be forced to buy their own AI factories, which is what Jensen Huang has talked about. When you buy your own factory, meaning you're making your own tokens, well, great. Now you're going to be CapExing. This is going to be a very challenging thing to get through this. So I think we're at kind of the inflection point, but the only way it works, and it's a race for getting the physical side. So hardware should be bought, anything that needs to create compute. And that goes farther than just semiconductors. It goes farther than silver, farther than copper, because you're getting into the energy side. And that's one of the reasons why oil went higher. And you're going to start hear me talking more about it. The cost or input of silver back in fact, you probably haven't heard this, but this will be on the video. In 2019, silver's percentage cost for solar was 3%. It's now up over 30. So that means that solar is getting more expensive and the cost, or the input cost, is becoming more silver heavy. Now, silver could easily go up another 3-4 times from where it is because of the fact that we don't have enough supply, and it's needed in the military, and it's needed for the data centers and the phones and everything else. So you're starting to get into the world where it has an impact on solar production, which has an impact on power production. We have gas turbine shortages. This is one of the reasons why eventually it trickles down to oil, it trickles down to aluminum, it trickles down to everything, because we're looking for replacements for everything. When you get into a commodity bull market, which we haven't been in for since 2003 to 2008, you end up in a very tricky situation where everything that's physical we try to get and use. And I think that's what's happening in the market. And I think we're in the very early stages, because right now the adoption is just starting to pick up in terms of AI. It's getting to a point where the largest demand for it, because solar is the largest demand for silver at this point, you should start to see less demand for solar, and you'll start seeing switching to some degree for, okay, let's do coal, let's do natural gas, let's get generators, whatever the case is. The problem is silver is also used and needed, like I said, in the military. This is a critical mineral. There's a reason why they have the name critical mineral. And I want people to fully grasp this. Rare earth, silver, these things all fit into it. I mean, the U.S. has basically been making announcements after announcements since the tariff situation. So my belief is that all of these things are going higher. At a minimum, here's what I'll say. Even if silver, let's say it peaks at 125, it goes to 200, it falls back to 100. The main thing I can say to everyone is it isn't going down in price when we need it for all those S curves hitting at the same time. I wrote a piece for 22V this week where I highlighted the S curves are all happening at the same time, meaning we're at that point in the S curve where all the demand kicks in and it's happening at the exact same time. We need it for EVs. Autonomous vehicles are getting revved up. Autonomous trucks are getting revved up. Humanoids, drones, everything in the military. We're rebuilding the military. I don't know if we talked about it last week on the show, but I've talked about it before. Certainly, we ran out of ammunitions. I mean, munitions for the United States were down at very low levels post Israel from getting them, and also Ukraine. We need to rebuild the military. At the same time, Europe is building up their military and doing it for the first time. And you've got people like Jeff Curry, who used to be a Goldman Sachs, doing interviews saying this is as big for Europe as it was for China in 2003 to 2007. I'm not getting into the numbers of the commodity needs there, but both of those are price insensitive. If you're trying to have military supremacy, there's no price for this. People should go back and look at what happened in the United States during World War II and what we did for stopping people from using copper and what we had to do to actually go through it. The price was infinite. I think we're at a point right now where people just have to realize the only thing that could really make this pull off dramatically is honestly if energy prices went up so high that there was nothing to do to slow down the AI. I just think commodities at this point are insensitive because of the small cost for these critical minerals as an input. The only one that's starting to reach a level that people should pay attention to right now is solar.
The market feels like it is racing against time. Technology is accelerating faster than anyone imagined, and the old systems are struggling to keep up. Software scales endlessly, but the physical world cannot. We are running short on energy, metals, and the materials that make modern life possible. That tension between abundance and scarcity is building pressure everywhere. When the balance finally breaks, it will not be gradual. The world will shift suddenly, rewarding those who saw the signs long before everyone else. According to Visser, the balance of power in tech is shifting fast. For years, software giants ruled the market, but now the momentum is moving toward the real builders, those providing chips, data centers, and energy to fuel the AI revolution. The story is no longer about who writes the code, but who enables it to run. Capital is rotating, profits are being trimmed, and investors are searching for scarcity in a world of abundance. The next decade will reward adaptability, not legacy. Let's watch more clips from the interview.
Well, first of all, because we've talked about it now 3 weeks in a row, there's a bigger story here that people have to start to go through. Our big, our Salesforce.com, Adobe, are these big companies that have Microsoft, are they going out of business? Absolutely not. Is there a question about their ability to pivot and compete with what's happening? Well, right now, since November 28th, 29th, when really Opus 4.5 came out, I posted this in X, but it's been body blow after body blow. Every week there's something else. It's Opus 4.5, then it's Claude Code, then it's Cowork, then it's a Claude Bot. And then this week, X is littered with showing how people are using Claude in Excel and how great it is. Well, that's Microsoft's honeypot. How can we be showing Claude in Excel when it's Microsoft's product and never is there a Copilot thing in X viral? Never. No one even talks about it. So the issue is for me on this, we're seeing Anthropic's revenues go through the door. It's a company that is very tiny relative to Microsoft. Microsoft has had 3 years since ChatGPT was released. Initially, they were the ones thought that they would win. We were talking about numbers that were massive for them because they had a stranglehold on the enterprises. Everyone's that has Microsoft inside the enterprise. So how are they losing this? it is very difficult for companies to change and be able to pivot because they'd have to bastardize their own product and compete with it. And so what they do is they're trying to figure out ways. Microsoft has two issues. One is they don't have a model, meaning they're not one of the frontier model companies. So they're competing to some degree, or they have to use their model. The second thing is, though, they're in the cloud business. Well, you know what the cloud business needs? It needs data centers. You know what the problem is with that? They're competing again with the model companies, which are basically able to sell this stuff and are seeing the revenues grow. So Anthropic this week came out and said the revenues for next year are likely to be $55 billion. This was a company, I believe it was 1 billion, then it was 10 billion. Now they're forecasting 20 billion for this year. I mean, it'll be above 20. They're raising money. I heard it was 5 or 6 times oversubscribed on most podcasts. They're raising 20 billion. I think people should really pay attention and just realize we are at a very, very historic inflection point where software has dominated for a long time. It will take a long time for this to normalize. And I think we're still in the very early innings, but we're through the part where from this point, it's probably going to be more challenging if you've got trades on, but I would still be long Chevron over Salesforce.com as a thematic trade that'll last the entire year. I am reducing because, I mean, Micron, from the first time that I talked about it, it's up 7 times. So I got good? In some on Liberation. That's good. But here's the thing. Do I think it can go up 7 times from here? No. Do I think there will be supply coming online in the next 3 years? Yeah. It's still cheap. I still think it's going higher, but do I think it peaks around, I don't know, 700, 800, 1,000? Yeah. Well, that means by definition, let's assume it goes to 1,000. You got in at 60. Well, that means right now we've done a lot of the trade. It doesn't mean we're done, but in percentage terms, we've done a significant part of it. So I've kind of looked at it as I want to be reducing there and I want to be moving some stuff into things that I will still think will still benefit, that will go up more. If you ask me over the course of the next year from here, I think Corning will outperform Micron. I still think Corning is at a very early stage, even though it's had a big run, because I think optical fibers, Meta just sent you a signal. We don't have enough, and they're going to benefit from the glass build out for the phones and the computers. So, and the autos. So I look for other themes that maybe haven't run as much, in terms of like silver. The silver miners to me are a great place to be in because they've traded at a discount relative to the metal. And the reason is because these are cyclical businesses where you think eventually silver will reach a level and it'll collapse. That I don't think is going to happen this time. So energy companies to me trade at cyclical levels. So at the same point do companies like Corning. Micron is still cheap, so I'm still in Micron, but I've reduced the position. I'm looking for other things. But remember, for everything that we're talking about that I've been right on, I'm really been wrong on MicroStrategy and I've really been wrong on Bitcoin. So there's always something in the portfolio that's not working at a given time. I still believe in those positions. So I've been adding to those as well. I added to them, when Bitcoin got under 105, I did it at under 100. I did it when it broke back above 92. So those haven't worked, but a lot of that is coming from a rotation in my portfolio. I'm assuming that eventually I'll get a parabolic move there. I still believe that's a place to go, but that's what it is. I constantly am looking for new, fresh ideas to move into. I have a lot of these semiconductor names that are analog based that I don't think have participated yet in the same way. So I've also mentioned Teradyne. I've also mentioned a lot of names like that, Lattice Semiconductor. These are all names that still have a long road ahead of them. I mentioned ASML. That one's had a big run. I still think that has a long way to go. So I look for other positions when something has had that kind of a run, but I'm still going to be in it.
Markets are painting a split personality right now. Bitcoin tried to rally above $79,000 after a rough weekend, only to roll back below $77,000, leaving traders scratching their heads. At the same time, gold and silver aren't just moving, they are surging. Silver is up sharply, and gold is flirting with $5,000 an ounce, forcing everyone to admit something significant is happening beneath the surface. Traditional stocks aren't immune either. AI heavyweights like Nvidia, Microsoft, and Micron are trading lower, signaling that even the darlings of the market aren't safe from this rotation. Crypto stocks from Coinbase to Strategy remain under pressure as miners and AI infrastructure plays quietly gain traction. This divergence reflects a deeper tension in the market, one that Jordi Visser has highlighted repeatedly. He points out that the world is speeding up and scarcity is becoming more important than ever. Software and code can be created in infinite supply, but energy, metals, and computing capacity cannot. When investors start demanding real, tangible value, assets tied to scarcity will get repriced. Precious metals are already flashing that signal. Whether Bitcoin eventually breaks out or continues consolidating, the underlying lesson is clear. Markets are adjusting to a new world where scarcity drives value. Traders and long-term holders alike need to recognize that this moment isn't a pause. It's a pivot point, and the next big move could come faster than most expect. As we wrap up, if everything moves in compressed time, how do you plan to stay ahead of it? Let us know your thoughts in the comments below. Please share this video and hit the like button. Thanks for watching. Don't forget to like and subscribe.